Hello, everybody, and welcome. We're going to do another video in the video series. I've done some questions on activity-based costing as well as single plant-wide overhead, but I thought I'd make a video series on it just to help all those viewers out there. So this is managerial accounting. We're going to be looking at some overhead allocation methods, single plant-wide, departmental, and activity-based costing. This is part 0, and overview. My disclaimer and copyright notice: the opinions in this presentation are those of the author only and not the author's employers, including but not limited to the South Orange County Community College District and Irvine Valley College. Contents of this presentation do not constitute any legal or accounting advice whatsoever and are for educational purposes only. This presentation is copyright 2023 by Bennett Tchaikovsky. All rights reserved. Any distribution without the author's prior written consent is strictly prohibited. So if you remember going back to job order costing, one of the things we were going through and doing is we had our T account where we had our factory overhead, right? And in that T account for the factory overhead, we had our actual and applied. And when we were applying overhead, we were probably doing it based on, or at least for my videos, we were doing this based on direct labor cost. This is an example of single plant wide overhead. So now we're going to kind of dive into not only this method and also as well as some other methods. But why is this so important to us? And again, because we generally can't wait in terms of invoicing clients or going through and basically, figuring out how we go through and allocate cost to production. This is a really, really important part. Now, generally, what's going to happen at a company is you're going to come up and you're going to say, okay, our estimated overhead for the coming year is this amount. So let's go through and allocate based on this methodology. So what we're going to be doing here is looking at those different methodologies. Now, why is this topic so important? Well, when we look at the sales price per unit, we know that that is a known factor, right? We know how much we're selling the product for. We also know what are the direct materials per unit for that particular product. Because we can directly tie it. If we're adding materials into the production, we can generally figure out how much those are. It's not an unknown factor. Direct labor. If I'm tracking my jobs or if I'm tracking my production, I can generally tell how much direct labor is being used on a particular product. So those two parts, we are known factors. What becomes unknown is factory overhead, which, as we'll see momentarily, depending on the methodology we are choosing, it can change, right, on a per unit basis. We'll see how that works. And why is this why this is so important, is that if you're a manager and part of your compensation is on a segment or based on product profitability, if these factors here are known, but you don't know what the overheads are, that's a problem, because all of a sudden you can think my division's doing great, I'm doing awesome, and I'm going to get a big bonus. But if all of a sudden the factory overhead, and again, all companies are not necessarily going to do this, but if other costs start getting allocated to my division, which I don't have control over, and we'll talk about that in some future chapters, there's a problem. And that problem is, all of a sudden, that if 50% of my compensation is performance based and all of a sudden that goes away, I have an issue, meaning that I don't know how I'm going to, if I'm working and a big part of my comp is based on incentive compensation being based on how well my division does. And if I can't control those costs, or if it's also too, I don't know how they're being computed, or the formula is not fair, then that's a problem. And I'll put these two links into the discussion. And this is not really directly applicable, but this is this is just to kind of go through and highlight the point. So you've got Return of the Jedi, which, my story I was always tell my students is that when my son was like maybe 4 or 5, we visited a friend's house, and I had trained him. We watched episode 4, which is the New Hope, which is great. Watched episode 5, which is Empire. And when it came to episode 6, as soon as the spaceships went off away from each other, this is me being the old school Star Wars geek that I am. When the spaceships went away, that's when I cut off the movie. And it was really good because you don't have any Ewoks, you don't have any of like the really kind of cheesy dialogue that happens on Endor. It's just the spaceships go away, Luke's going off to Dagobah, and the Millennium Falcon's going to go join up with the Rebel fleet. Great ending to a movie, right? Now, when we come here and look at Return of the Jedi, by the way, that was ruined because I had my friend over at another friend of mine's house who was an old school Star Wars fan, and my son literally walked out of the room right at that point. But his friend said, "Oh, there's more to the movie." And then that disappointed his entire life. So at least I've not shown my son Godfather Part 3, nor will I ever show him that movie. Just watch the first 2. Okay. So when you look at this part over here, like how can something that made so much money become unprofitable? And this is essentially going through where you have like, and you can kind of see it over here, like Harry Potter, they actually got one of these from Warner Brothers. And if you see this, and if we look at this a little bit more closely, you can basically see that here's a profitable movie that has actually gone through and is actually at a net loss, or that's actually going through and losing money. And so when you look at this different type of accounting in terms of what goes into it, it becomes really important to know that, well, if I'm going to be compensated based on the performance of my work, how do I make sure that I get, paid the proper amount? And there's actually also over here too, it was an article over here, and again, I'll link these through Hollywood Accounting. Here's another link that you can find in the article, is creative accounting methods, and essentially whereby they add in all these costs so that something that seems to be profitable is no longer profitable. And, it's the way that they go through and do things. Now, what I saw when I was doing a little bit of profit participation work is that as talent moved up the ranks and they became more and more bankable, they went and said, "Oh no, you're not going to take any costs out. You're going to pay me on first dollar gross." So if I'm a Steven Spielberg, who is still making some pretty amazing films, perhaps if I'm Chris Pratt, if I'm a major Hollywood movie star, I can go through and say, okay, when that box office opens, maybe Christopher Nolan might be a good example. When that box office opens, I'm going to be getting 10% of the gross, or whatever it may be, without the studio being able to take any sort of deductions. So again, when we talk about and why do they say gross? Well, if you're saying gross, it basically means if you're basing your profit or a royalty based on the sales price, you don't get any of these other costs to be deducted against it. So instead of being paid off of the gross profit or the net profit, I'm now basically being paid on essentially the first dollar gross. So this is why this is so important, because if you're ever having any sort of contingent compensation, you want to make sure that, oh, I'm going to get the full amount of money that is going to be owed to me. So this is actually an extremely important topic for all of you that if you know people that are getting paid on contingency, this is a very, very important topic, because you want to know, well, if I'm being paid based on how something does, I want to understand the costs that go into that, and I wanted to have it very clearly defined. But let's now move back to what we're going through and doing, which is essentially talking about other methodologies in terms of doing some costing, or basically I would call it overhead allocations. So you've got activity-based costing. We'll start with single plant wide. Single plant wide is what we went back and did in job order costing. And when we looked at this under job order costing, we basically had, oh, I'm taking a percentage of the direct labor, and that's my applied overhead. That's fine, right? And that's an easy, it's easy to do. And it basically, it is acceptable under generally accepted accounting principles. So it's fully legal. However, this is not going to be as accurate as some of the other methodologies. The next one over here is we've got departmental. Well, instead of looking at overhead, we're not. So this part over here is we're basically taking the total amount of the overhead, we're dividing it by one factor, and then we're making the allocation. In departmental, this is going to be something where, well, there's one department, which might be the manufacturing, the second part, which might be the finishing, and our third department, which is support. So what we're going to go through and do is, instead of using the entire amount of the factory overhead, we're going to look at each of those departments individually and say, well, of the cost of those departments, how should we go through and make the allocation? That's departmental. So this is going to be more accurate than single plant wide, but the computation is going to be a little bit more, it may be a little bit more difficult. Now, with activity-based costing, we're drilling down. And this is where we can get into a lot more accuracy, right? And again, we're trying to go through and we're looking at this, is that what's the best way to go through and determine the amount that's being allocated to our factory overhead. And so with activity-based costing, it is extremely accurate, right? Very accurate. It's going to give us the most accurate numbers, because we're going through and looking at our overhead on a much more granular basis. However, the disadvantage to activity-based costing is going to be the cost. It's going to cost more to go through and to do these computations. So these are going to be the three methods that we're going to go through and look at. I'm going to do an example. The examples I will go through and use will be for single plant wide and activity-based costing. If after going through and doing these videos, if you want me to go through and use the same example to do a departmental example, I absolutely can. But for my class that I'm teaching this fall of 2023, I'm more going towards, I'm only really testing on single plant wide and activity-based costing. It's personal choice. So I will be going through and doing examples for my classes, which I'm sharing with the world. And so there you go. Well, the world of accounting, or my subscribers. So I want to thank you for joining me here today. If you have any questions, please feel free to leave them below, and I appreciate your liking and subscribing to the channel. If you do want to see departmental costing after I go through and do the other two, please feel free to go through and to leave a comment below. Have a great day, and I look forward to seeing you on the next video. Have a good one.